Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Carol, I don't know if you saw this story in the Journal at the end of last month. It was about the Memorial Day weekend migration, the roughly 800,000 First Republic Bank customer accounts. They were migrating those over to JP Morgan. First Republic, of course, failed last year. JP Morgan acquired it. So some former First Republic customers weren't so happy with the migration. And what the Journal story focused on was former customers complaining about not being able to make payments with debit cards, long waits for customer support, even a small business owner not being able to access money he had in a First Republic small business account. We should note that a spokesperson for JP Morgan told the Journal that it was, quote, the smoothest migration ever, and that after Memorial Day, most customers didn't have any problems accessing their bank accounts.
All right, so everybody, the reason we laid this out is that this is the opportunity that Brennan Coughlin sees. He's vice chairman and head of consumer banking at Citizens Financial Group. He joins us here in our Bloomberg Interactive Broker studio. Brennan, great to have you here with us. How are you?
I'm doing great. Thanks for having me.
We want to get into that and the potential that you guys see, certainly when it comes to banking areas and where you guys feel like you can build it out. But I want to first start with bigger, broader, the environment. How would you describe it right now?
There's still a lot of uncertainty, with rates certainly higher for longer. Inflation is stubborn and persistent, even though there's been some positive signs. Consumer confidence has been somewhat volatile, but now feels range bound, but it's still lower than it was a year or two ago. And so, I think we're still in a relatively uncertain economy. Everybody's hoping for a soft landing. Unemployment has been low, which has been good, but all those are factors that weigh on the consumer psyche. Spending has been high, and I would say broadly, since COVID, the consumer has normalized. Their excess cash and deposits on hand has largely been spent. Credit,
you guys see that in deposits?
We have seen that in deposits. It's sort of on an inflation-adjusted basis. It's generally back to normal for the average consumer in the U.S. And delinquency and credit charges have normalized. They've come back up, but they're stable. So we feel good about the economy right now and the health of the consumer in general. But there's certainly some things that we're watching.
I don't know if you heard our discussion earlier about the breaking news when it came to Pool Corp, the maker of swimming pools. They cut their earnings per share guidance for the full year. The guidance missed the average analyst estimates. They cut their guidance significantly to $11.04 to $11.44 per share, essentially saying that the discretionary components of our business have been challenged by cautious consumer spending on big ticket items like swimming pools and outdoor living projects, resulting in sales of building materials declining 11% year compared to the same period in 2023. Obviously a higher end consumer who's building a pool. Do you see any weakness in the higher end consumer pulling back on discretionary spending like this?
We don't at scale in terms of the health of the higher end consumer. If there's any stress in the economy, it's the bottom two deciles, folks that generally are paycheck to paycheck, where we're seeing a little bit of risk and volatility. Now, what I would say on that point on the higher end discretionary spending is we're in an environment that we've never been in before, with all of the unnatural events of COVID, and then honestly all the unnatural events post-COVID of folks being locked in their house and then going out and spending like crazy in 2022 and 2023. So naturally there may be a lull here where folks consolidated a lot of spending in 22 and 2023 and they got it behind them. So I don't know that that's necessarily a sign of stress on the higher end consumer as much as it's just unnatural volatility and economic activity given the COVID ramifications.
What are the advantages that you guys think you guys can offer versus maybe some of the big Wall Street banks? And I bring it up because we had a story earlier today about the Fed basically floating maybe a weaker version of the bank capital overhaul, which would mean maybe some of the ratios and so on and so forth wouldn't be so onerous on some of the big Wall Street banks. But talk to us about your position and kind of your lane specifically for Citizens Financial and where you see the growth opportunities are, and maybe because of some of the restraints that are, or some of the rules and regulations on some of the bigger banks. Yeah, but you guys also have regulations, of course, too.
The regulators are definitely trying to correct for what they believe to be systemic challenges in the market through the spring bank failures, and regional banks are certainly not immune to it. Maybe the opposite, given the perception of regional banking stress, which, as everybody at this point knows, it was much more idiosyncratic. It wasn't really regional banks, but nevertheless, we are very well structured. We've got one of the highest capital ratios in all of banking industry. We've got our liquidity ratios are comparable, if not better, than some of the big money center banks. So we feel very poised to capitalize on this market. In fact, you see us out playing offense. You mentioned in the tee up here some of the work that we're doing in the private banking and wealth space. My point of view is that the leaderboard changes at scale in moments of market crisis. So job number one for us last year was making sure the bank was safe, sound. We had capital, we had liquidity. We were a beneficiary of the deposit inflows like many of the other big banks. And so once we got past that, we said, look, we've gone through 10 years post our IPO, transformed the bank. Now let's make a couple of very distinctive and smart bets for the franchise. So when this market blows by, we will have repositioned this bank to win long term.
So let's talk about private banking, because I know that's an area that you are looking at very closely, and I've actually seen ads for it lately trying to pull consumers towards Citizens Financial Group. What's the white space that you see right now in the wake of the collapse of Silicon Valley Bank and First Republic?
There's an incredible white space, and many banks and many other consumer goods companies talk about their obsession around customer service. Unfortunately, it doesn't always play out that way. They don't actually deliver what they said they're going to deliver. And I think one of the real distinctive factors of First Republic and Silicon Valley was the intensity around their service proposition. It was very real. The media perceived it as growth through low interest rate mortgages and such, and there was some truth to some of that too. But when you talk to clients, the first thing they talk about is the unbelievable white glove service that was there. So my view is that is a huge amount of white space, that you've got the smaller regionals that don't have the sophisticated products and services to meet the needs of high net worth, ultra high net worth clients. And then you have the big money center nationals that have all the sophistication, but they're so big and they're so siloed and so bureaucratic that they can't bring it all together and value the client as one client. And so that's the space we're aiming to capitalize and create that single point of contact private banker that really delivers distinctive services. Think about the clients. Typically, you're a business owner. That's how you've created your wealth. You need personal private banking. You need banking for your business, and then you want wealth management. The bigger banks have those in 3 different silos, and the senior executives don't talk as much. We can bring that all together for the client, and that's what we're aiming to do. And I think there's incredible white space there for those that do that well.
How much of this is potentially a growth area for you guys, and what kind of growth are you anticipating?
This is an incredible area of growth for us. So we've hired 250 folks so far to build our private bank. And if you rewind back, through our IPO, we've transformed the consumer bank. We've built out a best-in-class commercial bank. We're now talking about the bank as 3 legs of the stool. Now insert private banking and wealth management. In our march, we're in sort of the top 10 U.S. commercial and retail banks. If we can get this right, we think it can really help propel the brand and the company into the top 5 over time. We have committed some external numbers that by the end of 2025, we will have $10 billion in deposits, $10 billion in AUM, and $9 billion in loans, which will be 5% EPS accretive, and that's just for 2025. So we think this is going to be incredible growth stimulant for the franchise.
Well, on that, when an individual does come to you and choose to be part of the private bank, where are you, for lack of a better term, making money off of that individual?
Yeah, well, the return profile of what we're putting together is actually accretive to Citizens overall. So we've been public that our medium-term return objectives are 16 to 18% ROTCE. This is one of the things that will help us get there. The deposit quality that we're getting from these clients is incredibly strong, which may be counterintuitive to folks on how these banks failed, but we're really growing at the speed of quality. So the deposit book is high quality. It's really given us the right to win in wealth management for the first time in high net worth and ultra high net worth. We bought a RIA called Clarfeld in 2018. We're building on that chassis. We're talking to some of the very biggest and best wealth managers in the United States. We'd hired a $5 billion team in the Bay Area, a $1 billion team in Boston. It's propelling growth in wealth management, which is sticky annuity-based fee income.
Brendan, who loses though in this? You guys also cater to the small business community, and I'm just wondering, what loses as a result of maybe this focus?
Well, this is all incremental to our current strategy, and so we're not taking focus down. Our small business banking franchise is thriving, and in fact, given that the connection to the high net worth, ultra high net worth space tends to run through small business owners as creators of wealth, this is actually accretive to our focus in the community for small businesses as well. So, look, who loses in this? I think it's the banks that don't have their act together in terms of the integrated service model that will ultimately lose on this.
Only have 20 seconds, but I got to ask about this Fortune article that talks about you being a potential part of the horse race to replace current CEO Bruce Vanon. Any comment there?
Bruce has a lot of gas in the tank, and anybody that's living and breathing in this company will know that he's the reason why we are where we are, and we've transformed the organization. So this is good governance for the board to lock up their talent long term. We're not expecting Bruce to go anywhere anytime soon.
All right. Appreciate you joining us.
Thank you very much.
Brennan Coughlin, Vice Chairman, Head of Consumer Banking over at Citizens Financial Group here in the Bloomberg Interactive Brokers studio.